It's a much quieter IPO calendar this week now that Facebook has already gone public. This week we've got Tria Beauty. This company is known for its laser light technology that a lot of people will be purchasing through the dermatologist to make them look younger or to treat their acne. So Francis, it's not a huge IPO, but is it something that people might want to get into because it does seem like people always want to spend on beauty treatments?
Well, it's an IPO that's fun to watch, and they may want to buy the new product that's coming out. They hope to have an FDA clearance later this year. But if you look at the financials, the March quarter revenue was up 39% to $13 million from $9 million the year before. The only problem is that they lost $11 million. So if you annualize that, that's $44 million loss rate. So that's a heavy-duty loss rate, and they're preparing for a new product launch. They have a couple of products already out on the market. So the price-to-earnings ratio is a -7, which means that the burn rate is very high for this company. So I wouldn't rush in to buy this one at all.
I know that if you go to a dermatologist for the actual treatments, they aren't very cheap either. They're pretty expensive, and you have to keep going back. Then we have another company, Corsair Components. A lot of gamers are probably familiar with this company because they sell the technology that enables you to enhance your computer to get the most out of a computer game.
Right. They have a lot of recognition from the industry trade press, and their revenue is seasonally low in the first and second quarter. So I'm a little bit hesitant to go after an IPO where you know that those quarterly revenues will be a little bit lower. And the reason is that the new components come out at the end of the year, then they have the holiday season. But their sales are about $488 million if you look at the last 12 months, so it's ending in March. So it's a pretty big company. I think the negatives on this one would be that their gross margin is relatively low. In March, March quarter was 15%. Which puts them almost in the commodity business, and their profit margin was only 2%, but as I said, that's a seasonally low number. The one thing that I'm not crazy about in the company is that the bottom line profit or loss is really affected by the DRAM market, and that's something they can't control. But it's a big established company. The underwriters are pricing it at 16 times earnings for the 12 months ended in March. I think it'll get done. I think it might have to take a price decrease to get it done, however.
Okay, well, there's always a buyer if the price is right.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting